Alibaba's IPO is on the clock. U.S. investors may be in a mindset to invest some of their money overseas. But what does the Asian landscape hold for investors? May not be as easy as you think. Paul Christopher, Chief International Strategist at Wells Fargo Advisors. He recently returned from a 17-day trip to Asia. He's here to share his insights. Paul, welcome. Thanks for coming in today. Appreciate it.
Thanks very much.
So you really did, we were talking about a little before the show, you really did do a whole whirlwind tour of Asia, the whole region. You're back here in New York, what is your takeaway? What's your one big takeaway to start off with for U.S. investors looking overseas?
Well, look, one big takeaway, a lot of small countries, a lot of small markets, even Australia, small market. Best way to handle these is because they all have different opportunities and benefits. Diversify. Take some broad fund and buy all of these developed and then emerging. You can buy them separately.
Yeah.
But you want to have exposure to all of these because you've got Singapore, great banking center, New Zealand, Australia, great commodity centers, but different commodities. You want to hold all of those together. And then the emerging set, really depending a lot on China. I've been talking about China. They depend on China not even so much for trade as they do for outsourcing of manufacturing and for inflows of Chinese wealth into those economies and markets.
Yeah. I think, when we think of emerging markets, when we think of Asia, you just think of these small economies that are just growing rapidly, mushrooming in front of our very eyes. But I think part of it also has to be that the dynamics can change very fast. Did you notice the dynamics changing? I mean, we all know China's slowing down, but what else? What's really going on over there?
Well, as China slows down, a couple of things happen. One is that there's actually more room for outsourcing because Chinese companies need to find someplace else to do business. Number one. Number two, wealthy Chinese individuals are looking for wealth storing havens in places like Australia, New Zealand,
outside of China.
Yeah. And so the flows actually have increased, leaving China. That's helping these economies. It's keeping interest rates low, housing prices high, and it's keeping those domestic economies churning. Again, another reason for an investor to want to hold these places, even as China slows, but do so in a diversified way. They're just too illiquid individually.
Yeah. I always try to get this question out when I'm talking to people about investing in Asia, especially if you're here in the United States, because you are talking about half a world away. It's not like keeping track of a company that is headquartered in New York and reports in New York. How hard is it for U.S. investors to keep track of their investments overseas, and what should they be doing to keep track of those investments?
Yeah, I mean, it's very difficult. If you're just talking about the corporate governance with James, I mean, that's almost impossible to do in many cases. A nice sort of substitute for that would be to have someone on the ground who can look at it for you and sell the companies when they need to be sold, either for governance reasons or for trend reasons. And that manager, that's the sort of a setup that a fund can provide. And our advisors have a variety of those sorts of funds that they can recommend for investors.
Yeah. All right, so I led you into a nice little plug for the business, right? All right, Paul Christopher, Wells Fargo, thanks for coming in today.
Thanks.
Appreciate it.